And welcome to the next edition of Your Home Sweet Home with Eric Groff from NavX Realty. And Eric,
Hello.
how you doing, buddy?
I'm doing well, Fletch.
It's another week, another great week. Spring might have sprung finally, so we're looking forward to that. Hopefully,
And the
maintaining.
temperatures have warmed
eh,
up
Yes.
significantly from the snow a week ago,
Oh man.
right?
Yeah, absolutely. Yeah, we were digging a hole in our backyard for our above ground pool, a leveling out. Not really a hole, but a leveling out. And the next day, it snowed 4 inches. It's like, well, so much for that.
So much for that, right?
So,
Yeah.
so here we are. Eric wants to navigate you to your home sweet home. We got a lot of topics we're going to be talking about over all the episodes. We've had 4 so far, some great topics. We're really going to focus in on first time home buyers because there's a lot of you out there and you're going to have questions. Some people are pretty diligent in their research and their abilities, but not everybody is. Not everybody. I know I wasn't, but I did some smart things and I worked out all right. But of course, I was 40 when I did it, So if you're in your early 20s and stuff, and I know when I was in my early 20s, I probably would have made all the mistakes. So quickly, Facebook. If you're watching on Facebook, click on the like and please share with your friends. Put the word out there about the Fletch Entertainment Network, especially the Your Home Sweet Home episodes that we got here with Eric. NavX Realty, by the way, if you're interested in talking to him more about being a realtor for you, your agent, there's his website. And YouTube. Subscribe and click on the bell so you get notifications about everything we're doing here at the Fletch Entertainment Network. So, first time home buyer. So, Eric, you have a person that wants to be you to be their agent, and they're first time home buyers. So, you take it away because I know you got some really interesting stuff you want to talk about.
Well, so the process always lends itself to how do I start? What's my first steps? And a lot of people haven't looked at what their credit score is at any time in their life until this conversation because they don't realize the importance of having a great credit score. Um, Getting a great credit score is easier than you think if you're doing the right things in a timely manner. And that's one of the things I love talking about with my first time homebuyers is, hey, eventually you're going to want to have a home. Eventually you're going to want to empower yourself to get the best interest rate possible. And the only way to do that is if you maximize out your credit score, right? So, one of the simplest ways that I actually learned from Clark Howard is getting your credit score established. Now, some of us are fortunate enough to have parents who are willing to place their name on their bank account or what would be a credit card account. And of course, the bank's going to want to know the child's social security number and full name. But once they've been added, over time, believe it or not, they're building their child's credit score without letting the child have access to a credit card or making any necessarily financial withdrawals without the parent's knowledge. Again, this is all determined by whoever is handling that. We're putting you on the bank account
Right.
process, right? So
That's something I didn't even know. That's good to know.
well, so Clark Howard, he gave me the hot tip on that. So I've done it for my daughter, and remarkably, he's starting to see all sorts of stuff come in the mail, like,
Of
hey,
course.
we'd like to help you, over here or over here, because we recognize that you're a good risk. And that's what it comes down to is that the higher your credit score, the better the bank feels that you are a lower risk in giving you the opportunity to borrow money and pay it back. And hopefully along the way, in their game plan, you miss a payment, so they get to charge you some sort of interest, which
Right.
that is the thing that I stress with all of the people who they have to learn the process of good gaming in the credit usage department. So pay your debts off as you get them, whatever they are. But for those of us who do not have the fortune of a parent that throws them on a bank card or credit card so that they can start building credit, there are other ways to go about it. Obviously, if you have no credit at all because you've never elected to get a loan on anything from buying a TV at Best Buy or maybe an engagement ring at the diamond companies, jewelry companies. So you have to develop some sort of space in the borrowing department. And if you have no one else to co-sign for you, which is another strategy, some people can find somebody who are willing to co-sign for, say, a college loan. That's another avenue that helps build your credit. If you're without any of those resources, then you can ask a credit card company to consider giving you what's called a secured credit card account. And the difference between secured and unsecured credit card is that the secured is where you are giving the company money up front. So typically people start with $500 on a credit card. So the people actually have to surrender $500 of their own money. And then in any given month, you have the chance to go spend money on the credit card. And then at the end of the month, you get a bill from the credit card company that's due. And as long as you pay it back, that same $500 amount that you originally had allocated to borrow is right back there again. And you can borrow it again month after month. Now, the beauty behind all this is you're trying to show the credit card company that you are responsible, you are reliable. And ultimately, over time, and it's different for every lender, but it could be as little as 3 to 6 months where they're going to give you an extension on that credit. Now, all of a sudden, you may have a $1,000 credit line. This would, in turn, give you a little more spending power. And as long as you're doing your part to repay it back, you're not going to pay any extra interest. So it's just a different way of using money, right?
Sure.
Because you could pull out cash out of your pocket and pay for items as you go. And some people feel that's the only way they want to manage their life. The problem with that is if they don't have any other avenues in establishing their credit, they're not going to be in a position to buy a home because they're not going to have a credit score that the bank considers reliable. So,
Right.
so on that topic, so you've got those three mentioned opportunities, right? You got the mom and dad, put me on there. I need a co-signer, put me on there, or you go out and get a secured credit card. Credit builds up over time. Not something that's instant, but the little that you do consistently will create, you'll have a credit score. And as long as you don't have any other missed payments from, let's say, health is another big avenue that we have health bills. And, if you're unable to pay for the full amount, because we talked about this, Fletch, some people's bills are outrageous.
Yes.
And, you have to work out some sort of payment plan.
Yep.
And yeah, that's the key, is that you develop what is reasonable for you. And as long as you're being faithful to making those payments, you should have some support on the individual medical company who's billing you. You may have to ask for additional support depending on your situation. But
Oh yeah. Yep.
that being aside, besides those regular payments that you make over time, building up a really high credit is it's also determined on how much you owe. So they, as I mentioned, 500 is an initial amount that you can borrow. Eventually, you'll get into the $3,000, $5,000, $10,000 uh, opportunities because you will eventually have other credit card companies that solicit you for unsecured credit. And that's where you don't have to put any more money up front to these credit card companies. They already recognize that you're responsible enough to have a credit card. So they'd like to get on board and, have the opportunity for you to be one of their potential payroll people,
Right, right.
I mean, again, they make money when you don't pay stuff on time. So I emphasize being due diligent about knowing when those payments are due. Never spend more than you know you're going to make in any given month, or for the time period that you have to allocate funds accordingly. Right?
Yeah, well, yeah. One thing's for sure is if you got a credit card company offering you an unsecured credit line, with a card of an amount, that doesn't mean that you just go out and put that whole amount on something, max it out right away.
Correct.
Because I mean, like you said, you have to look at your budget, look at what you can pay, because what you really never want to get into, which they would love for you to get into, is you got a 3,000 and you've maxed it out, and your minimum payment is $50 a month, and you're paying $50 a month. You're just giving them free money because the interest is the only thing you're paying on.
Right.
You're not paying on your principal.
Right.
After 10 months, your balance is the same place it was, if not higher from other things, because their interest is really high and stuff. So you just got, it's something, oh, wow, look at they're offering me so much money. Great. I'm going to go buy stuff. Just be cautious and be smart about what you're buying, because they want to trap you, so to speak, into the kind of people that are paying them money, and you're not getting anything for it. Absolutely.
This is, I mean, you're hitting the nail on the head. This is a huge responsibility to have somebody give you an opportunity to go spend some money, and you owe it. I mean, you cannot pretend like this is a free handout and it's not due back in a timely manner, because you're going to actually pay a lot more if you don't pay it back in a timely manner over time, right?
Right.
Just like you mentioned, if you max it out, well, first of all, you don't have the ability to use it. Second of all, it's actually going to hurt your credit to max it out.
Yep.
Ideally, you want to have of your credit card at least 20% is kind of my comfort level to tell people. Have at least 20% of borrowing potential left on the card, and pay it off.
Right.
You'll have a fresh new month. Go out and listen. We all buy things when we're out living, whether it's in an apartment or a home, called groceries. Right? We all got to eat.
Yeah.
Whether we're eating out or we're eating in, we all got to eat. So just think of it this way: you're spending money every week to week on groceries. You could spend that same money on the credit card, and you've allocated it accordingly. So at the end of the month, you're paying it off. And
Right.
a big benefit to doing this over time, Fletch, is that there are credit card companies that offer you cash back on all of your purchases.
Right.
And so because I have done a good job of taking advantage of these programs, I have made, I think, over $2,000 in cash back over my lifetime, because I'm just, I'm playing the game.
Sure.
That's what it comes down to, is you're using the same money you would any other way through the credit card system, and then you're paying it off, and they now owe you. And
they're banking on the fact that the majority of the people aren't playing the game well. They're losing that game.
That's
so
right.
For every one of you, there's 10 to 15 other people that are not doing it that way, and they're getting caught up in because once you go down a certain rabbit hole, a certain depth, it takes a lot of time to dig yourself out of it,
It does.
the right way versus, filing bankruptcy or something like that, But yeah, it's like I would tell people, if you're going out to eat once a month and now all of a sudden you got a credit card, you should still not only go out to eat once a month. Don't go, oh, cool, now we can go out 4 or 5 times. Now you're spending money you didn't have at the beginning,
That's right.
where you could just do that and then pay that off. If you spend some and pay it off every month, absolutely your credit score they'll benefit you
It will start to
activity.
climb, right?
Right.
And the other key component to building up a decent credit score is the type of mix of credit that you have.
Right.
Okay, so we have the credit card. We can also go get small loans, as I mentioned earlier. You can do 12-month same as cash kind of thing through Best Buy or local department store, whether it's home improvement related or retail. Just those environments. What they're doing, each one is going to ping your credit score, and because of the type of purchase it is, you're going to have more of a chance to qualify for those small loans than you would for, say, a house.
Right.
Because a house, ideally, you're going to have to meet a certain level of score to get in there. Now, the deals that you get for buying a house start around really the 700 range, but you can get a house in the 620 credit score range. You're not going to get the best interest rate
Right.
that they have available. But if you're starting to tap into the 740 range, 770 range, even that's the top. 770 and above, you're going to get the best interest rate that the bank has to offer at the time. However, if you're not fortunate enough to do that and you do need a house, worry not, because the bank is there for support, and there are some lenders who will permit as low as a 500, 520 credit score. But again, you'll be paying for it.
Right.
They'll hit you with fees that wouldn't be there for the guy who's got the 770 credit score, and the interest rate is going to be higher, significantly higher. Could be up to 2 points higher in some cases.
Right.
So it really behooves you to master the credit score game of how you build your credit. And these are the first conversations I have with anybody who have big aspirations of becoming a homeowner, and yet when I ask them, what's credit score like, and they look at me with deer in a headlight, like, I don't know. Okay, so then I start asking questions like, well, did you buy a car on a loan? They'll say, no, we paid cash. I said, well, you did not do yourself a service then
Right.
by buying a car cash. And they'll argue, and they'll say, but I didn't borrow any money from anybody. Shouldn't that help my credit?
No, because it's not enough to not owe. They need to see that you are a good borrower.
Right.
So
Yeah.
it's great. You don't have a lot of bills. You don't have a lot of outstanding debt. Awesome.
Right.
But what kind of borrower are you?
What kind of borrower are you? That's right.
Right.
So teaching people the importance of getting those small little loans, or the unsecured credit card, building up to the other version. All of those help. So the credit mix helps to build you into the 600 range. Initial credit, like the unsecured or having somebody co-sign for you for a small loan, is going to get you on the map. Eventually you'll be at 500 or so. And over time, as long as you don't max out, like we talked about, and keep adding things that are within your wheelhouse for regular payments, like you just got to be a good manager of money, then you can build your credit score. So that's step number one for anybody who's thinking about becoming a first-time homeowner.
Sure.
Okay.
Absolutely. And that's sometimes it could be somewhat overwhelming for somebody to hear all that, and it may be a deterrent to a certain degree, thinking, well, I don't have a good one credit score or whatever, so it's like, what's the point? Or but 5 years is quick, and in 5 years' time, you can go from not a good credit score to being someone that could be up in the 600s, if almost 700s, if you can, within that 5 years' time, establish good credit, eliminate debt, and keep payments on time. That
Right.
because I know from past history, talking to banks and stuff, that a lot of times they look at what have you done in the last 6 months. If you can show us that you have done, if you're haven't missed any payments on all your things in the past 6 months, that shows a good. So they look at that to start, and the farther back they can go, the better you're going to look. So 6 months from now, you can look better than you did, and then a year from now, you can look better than you did. I mean, it
Right.
doesn't take a long time to move the needle, but in 5 years, you can really move the needle.
You can really move the needle. Right.
And would you much rather have the house that you like or that you want at a much better cost by
Right.
waiting 5 years to get your credit score?
Yeah.
But like you said,
Regardless.
if you
Regardless.
can't, you can still get that house and work on your credit score and refinance in 5 years and then get it lower. Because
Regardless of where interest rates are, Fletch. You know, you just said it. That wouldn't you want to borrow that money for the best that you can?
right,
Because that's going to either maximize your purchase power or your comfort level of what your mortgage payments look like. So
right.
you know,
And like we talked about last week, I think it was the refinance show. If you're in your first 5 years of a 30-year mortgage and you really can move your credit score to a great place in 5 years, refinance at a 15-year and a lower rate, and you're in a much better situation. I mean, there's no,
yeah,
and sometimes it's hard to see. So if you're talking with Eric in front, he can literally show you on paper, the numbers, and it really makes a lot more sense when you see the physical numbers and how it's like, wow, because the thought of going from 30 to 15 is scary, even for me, until like I would talk to you and you were like, just 2 points of this in 15 years, and you'd be amazed how much your price is. I'm thinking, oh, I could never afford that. But you don't know until you see the numbers. So,
right.
it's good to have a plan and work out the plan. There's no doubt. And obviously, Eric is a great agent to help you find your starting point. And like you said, it's not like you can't buy a house now. You can. Maybe you can buy a different house, or like you said, you can buy it for what you can afford, and you work on it for 5+ years, and then refinance to where it's a lot better situation.
Yeah.
Especially if you're going to a 15 year. I mean, that's
Well,
huge.
and that's there's you've made another thought come to mind when you say that. In 5 years' time, just think of the last 5 years, Fletch, how the value of your home has skyrocketed. And if you were the type of individual that bought in an area that really benefited from all of that in increased value, not only going to the bank and showing that your home is worth a great deal more in that 5 year stretch and what you owe, you might be able to knock off that 3 letter acronym PMI, which is something that, it's another part of the first time homebuyer conversation
Yep.
that it saves you money. So, um, so section 2 on the first time homebuyer world is, so you're going to get a credit score. Got that, and you're ready to go talk to a lender. The lender says, I like you. I like you. You're a good worker bee. I like your work history. I've taken a look at your credit score, and it shows me that you're responsible. I like that I'm going to have an opportunity here for you. And they're going to give you some numbers to play with. Those numbers are a percentage of what they think you can allocate towards a home. Now, be very cautious. The numbers that a bank will tell you you can afford are going to absolutely maximize, realistically, your ability to afford the home. And you should really come down 10, maybe 15% in some cases of what they think you can afford, because life happens. Right? Life happens, like I
COVID.
got COVID, or I am going to be expecting to be a parent, for the first time, and now all of a sudden you have a new mouth to feed. Um, what about a like COVID in the suggestion of temporary job loss?
Yep.
You have allocated some money in savings, and you had to um, put that aside for a rainy day. And that rainy day came. So, the best advice I can give on this matter is that life happens. Don't overdo it in the what you can borrow. My personal recommendation is borrow 25%, or set aside 25% of your net, not your gross, your net that you can on your mortgage. Because other things in your life, whether it's car payments, the groceries, the utilities, the other things that life brings you, you might need some clothes, right? We might need some uh, basic things like a pet,
Oh yeah.
and pet supplies. And
Yeah,
uh,
our oldest Emma is the last 6 months to a year just seems to be blowing through sizes of clothes.
growing
It's like,
like a weed.
yeah, it's like, God, we
Yeah,
just bought those and now they're capris, or
yeah.
something, where they used to be long pants and stuff. And, so we're fortunate that, my wife's always been a very intelligent buyer, the consignment shops.
Yeah.
It's amazing. You can find brand new clothes at
Brand new
consignment shops
stuff.
because,
We've done the same
like
thing.
us, some
Yep.
people never had a chance to wear it and they already outgrew it. So you can
Right.
find great stuff there. And the other part of that is, my kids are kind of rough. They're out back playing in the dirt, which I love, so it's like, I don't have to really buy them the nicest stuff because they're going to rip it up anyways, So, like I did, when I was a kid, I was outside tearing everything up, every one of my pants had knees out. My mom's just like, put a patch on it, So,
That's
yeah,
right.
you got to think of, like you said, and then food, kids, believe it or not, kids eat. And the older they get, the more they eat, especially if you have boys. So I thank God I have girls, Girls are
Yeah.
always watching their waistline, and boys are always watching the plate,
Yeah. What,
But
what else can I put on there, right? Yeah.
and
So,
yep, and an animal. We got ourselves a dog last year, so he's not too bad. But we also were at a place where we knew we could afford it. It wasn't like we're pushing the envelope and everything. So
right. Yeah. And, over time, whether it's the dog or your children, you personally, your life's going to evolve. And as it does, uh, monetary spending is going to change, right? I mean, it's likely to change. You might have more insurance needs than you thought originally. I mean, I didn't think about having life insurance when I was what we call a DINK, double income, no kid. And, when my wife and I were just married, we didn't have kids, so I wasn't thinking too much about insurance. Of course, you have to have certain layers of it, right? Your car
right,
insurance, you got to have some health insurance, you got to have some, because we bought a home together, you have to have some home insurance.
right,
But the conversation started to circle around what happens if you lose your job. You need that kind of insurance. You need the kind of insurance that, what if we have a major catastrophe in the health department that's not necessarily covered by our standard health policy? You have to have that kind of insurance. And life insurance, like what happens if one of us die? Now all of a
right.
sudden, the other one's going to they'll have the burden of all these bills that we generated together. And, you'd like some easing of that, especially when it comes to the mortgage, because the mortgage is the largest of the bills. Everything else, you can pay off in time.
And
Um,
I will say, when we bought our home, the lady asked me. She was not the mortgage title person, but the actual agent from Wells Fargo, who I was with, still am. they I told her that we want everything based on my income because my wife is eventually going to not work and stay home and all that.
Yeah.
So we have built in to the mortgage that if something happens to me, there's extra money in the mortgage to pay off the house. So my wife doesn't have the burden of having to pay for the mortgage. Obviously,
Nice.
taxes are different. So that's another thing to think about is, in certain instances, you can set the rest of your family up if something happens to you as the breadwinner, which I am in the family. So,
Yeah,
my wife
these.
my wife has that much less of a burden.
Yeah, exactly. And listen, Fletch, when you and I made these big decisions to become homeowners, I wish I had a mentor that would have sat down with me and talked to me about all this stuff that I learned along the way by design or by accident. Because, that forethought of being able to plan accordingly would have been monumental. And I would have maybe made some different choices
Right.
when I was younger. Um, exactly, and it's just education needs to have a chance to make a solid decision for their future, right? And so
Oh yeah.
that's what I'm really big. Just part of where your journey's going, and I love sharing my insight about what mistakes I've made, what choices I could have made differently, the timing of these have defined where I'm at today. I mean, it really comes down to you can choose to or not to do some things, and it will change where your 5, 10, 20 year opportunities um, are. So,
Yeah. Unfortunately, and I was one of like this in my early 20s because I wasn't buying a home or anything, but it's hard to think that far down the road, for some people. And I was one of them. It's hard to, some people start saving in their 20s, and God bless them, they're probably way better off than I will be.
the
But
the um, the big young generation behind us, you mean? They have the living in the mom's basement too long scenario,
right.
but at the same time, like you're saying, they've saved thousands of dollars.
We hope.
Thousands. Yeah.
You hope.
Well, listen, last year, millennials percent of all new or not new construction, but home buying
Oh,
across
okay.
the country. So they and I think that's one of the biggest reasons why we are in an inventory lag is because we had this bum rush of um, people coming forward and saying, well, I want to buy up the inventory. And they did.
And they're paying through the nose for it.
And now they're paying through the nose and making everybody else
Yeah,
pay
the
through
house.
the nose for it. God bless them.
Yeah, it's not a buyer's market from a cost standpoint. There's no doubt. So funny, but man. So yeah, just being able to have the forethought about down the road in anything, even if it's 5, 10 years down the road, it's going to help you all the way around and planning and stuff. There's no doubt.
Yeah.
Versus some people going blind and there's other things. Like you said, something happens, life happens,
Right.
and then it just destroys everything because they weren't prepared. You know
Yeah.
and you end up having to walk away from your home, unfortunately, which you never want to have to do. But if you do, life's not over. You just start over.
Right.
Which
Yeah.
great
I
thing
mean,
about this country is they do have things in place to help you start over if things happen.
right.
So but you hopefully never have to have it do, but no doubt.
Right.
So, uh,
So where do we go from here, right? I mean, there's certainly a lot more to talk about with first time home buying. I don't know how long we want this episode to go on, so we could probably touch upon it next week.
oh yeah, absolutely.
The credit score business was again an important part of the process that I wanted to emphasize. So I'm glad we got that out.
Yeah, and it's huge. It's kind of like get that out of the way, and like I said, it doesn't have to keep you from buying a home. You could buy and then just plan on making things better, and in 5 years, look at it again. And if you're going to do that, get the 30 year
Oh, listen,
to help yourself out, and then
have
work to the 15.
just as I said, those small loans make a difference in building your credit score. Man, the home is a big deal because it's such a larger commitment
Right.
financially.
Right.
And again, with you being due diligent and making those payments, credit people reward you for that. You know,
Right.
the so there are three credit bureaus which I haven't mentioned yet. If I can get all their names right, TransUnion, Experian, and Experian. Let's see if I can get all three right.
Expedia is a travel agency, so
That's
no, it's
right.
not
You're right.
Expedia.
Experian, maybe.
Experian is one. TransUnion is
TransUnion.
one. And the other one, and they advertise all the time.
That's right.
I
So
can't think of what they we should have done our.
we should have had our notes handy on this, but that's what you
we-
get from a non-scripted conversation. Sometimes
Yeah, if we don't think of it this week, we will definitely have it next week as I look up the 3 credit unions right now.
on the internet. So,
TransUnion, Experian, and of course those are the 2 that we already have.
right. See, the 2 common ones, right? Third one we're lacking.
Why is it? It's not Equifax.
It is. That's it.
Oh, it is
That's-
Equifax.
I believe
okay.
Equifax is the third. Yep.
Okay, well, there you go.
Yeah. There you go.
There.
So
On the fly investigation.
on the fly. There you go.
So if we pick up the ball next week, are we going into pre-approved or what?
Yeah.
What is that?
Yeah,
the next step?
going down the lender road of does that entail? What depending on the type of loan that you want to chase is another good conversation, because there are several different ways of getting money borrowed, and each have their own type of stipulations. So we can talk about each one of those.
Okay, we'll definitely pick that up next week.
Okay.
More first time building on that first time home buyer. We'll do that to and obviously questions. We will answer them. We love questions, so give us your questions, and we will get with those answers to you, because we can only think of so much, and I'm sure there's always certain unique circumstances and situations that we may not be hitting on, with that you're in. So we will definitely, and can always reach Eric during the week. He's got a website, ericgroffrealtor.com. He's got a place on there where you can connect with him and send him messages. You read his blog and get connected, learn everything you can about NavX Realty. It's a fantastic realty company, great people there, and they're all there for you. They're great agents, and the best thing they can do is to help you be the best buyer or seller that you can be, and then it's a win-win for everybody. And
Or just educate you. I mean, like I said, we're big in mentorship. We want to empower people. The company's goal is to empower people. So it doesn't have to be real estate.
right. And of course, with Eric, he's navigating you to your home sweet home. That's his slogan, mantra.
Okay.
and it comes from the heart. Absolutely.
Yeah.
So enjoyed it this week. It's been fun. Some laughs, no problem. That's always good to laugh. Quick restaurant reference. You mentioned that you were going to bring up.
Yeah. So Red Robin is one of those restaurants. I know it's a chain, and I would stress that more of the local food fare that isn't a chain might have a little more zing-zang, and a little more stake in the game. But talk about a great hamburger. Red Robin has got an amazing, and so many different varieties that I've tried at least 6 different kinds and really enjoyed. So would you agree?
Absolutely. We it's one of our go-to places as a family, because you don't have to worry about being a little bit too loud there. Red Robin's usually kind of a loud a place. Not crazy loud like going to Frickers or they're playing ball games and all that, but my one kid hates going to Frickers. He's like, it's too loud in here, which is amazing. It's too loud for a kid. But no, Red Robin is a place that we like very much. So we frequent there probably once a month, maybe once every other month, as a family. And if in case people didn't know this, or maybe even you didn't, you can make any burger bunless and wrap it in lettuce. So if you don't want
gluten-free
the carbs,
right?
you don't want the carbs and
gluten, or gluten-free people.
Right. So my wife does that. Probably the last 2 or 3 times I've been there, she discards the bun and wraps it in lettuce.
Okay.
I tried it once and it was good, but it's just a little bit too much lettuce taste for me. I don't put lettuce on burgers anyways, so it's adding a flavor I don't want. No big deal. You can also substitute any patty for a veggie patty of any burger creation you do. So you like the Whiskey River or whatever, then swap out the patty for a veggie patty and still enjoy the exact same flavor of that unique gourmet flavor. So they are by far probably one of the best burger places on variety. They have an unlimited amount of things that you can put on burgers. Cracked egg is one of my favorite things on burgers, and they have that on there in one of their burgers too. So that's really good. But I will bring up 2 quick places. 571 Grill in Donaldsville. Not open on Sundays and Mondays, is a local place. A senator from the state of Ohio came down and anointed them as the best burger place in the state. They have some fantastic burgers. They're very unique. They got one where the bun is a glazed donut. It tastes awesome. Yes, top and bottom is a glazed donut cut in half. Yes, it tastes. Every Tuesday is Taco Tuesday there. They got like brisket tacos, seafood tacos. Yeah. It's a great place. It packs out. It's decently sized, but it's very popular, especially on Tuesdays with the Taco Tuesdays. It's hard to get in the parking lot. But it's right on 571, just outside of Donaldsville. It's just off 675. Go up and you can't miss it. And then I want to mention JD's Ice Cream. They're only on Facebook. JD's Ice Cream. You can type in the name Pete Dawson and as the person to find on Facebook. And his Facebook page is currently being used. He's one half of the duo creating some incredibly tasting ice cream every week. And here's the setup. On Sundays, about sometime in the evening, I don't know if it's a set time or not, they, on that page, announced the 3 flavors for that week. They sell them by the pint. $8 a pint or 3 pints for $21. And it's all very unique flavors. It's not just like a vanilla ice cream with a mix in. The ice cream is a flavor of some kind that created. They created a coffee one last week. They actually brewed coffee. I've been talking to these guys. I'm going to get them on an interview on the show at some point when they have time. They're so busy because they have day jobs too. So they brewed coffee and then did something else with it to mix it in with certain ice cream. So they're making their ice cream, and it's flavored ice cream, as well as there's putting different kind of mix-ins. Last week they had one called Road to Texas I was telling you about, and it has caramelized brisket in there. And I know your eyebrows are kind of like, what?
I know. You said beef. Is in your
brisket, and I was skeptical, but it really wasn't. It was good, My wife didn't care for it. She didn't hate it, but it wasn't her cup of tea, so to speak. My daughter liked it. One of them did. The other one was cotton candy ice cream with caramelized frosted flakes. I mean, that was a winner all the way around.
That sounds like something that'd be right up my alley.
Yeah,
I loved cereal. I love cereal.
They had one a few weeks ago that was Fruity Pebbles. PBLZ, and it was cereal milk ice cream with Fruity Pebbles in it. Dude,
nice.
It changed my life. I mean, I was literally looking at it disappearing thinking, when this is over, I don't know when I'll ever eat it again, because these are the only guys making it. They don't make it every week. I actually I contemplated therapy on getting over the fact that this is all I was going to have. So the next week with the Easter basket ice cream, I got 2 of them because it was so good. So basically they announce it on Sundays, and then that Thursday, the following Thursday at 8:00 on Pete Dawson's Facebook page, he posts right at 8, items are available, and you just comment, I want 2 of this, 2 of this, 2 of this, 1 of each, whatever you want. And it's first come, first serve. They're monitoring it, and when everything's gone, they say it's all gone, and then they reply to you individually, let you know that you got your order. And then they'll tell the first person to be on, sorry, they were all gone. You pay them. If it's the first time you've done it, they'll send you a private message to show you how you can pay, PayPal or Venmo or something. You pay them, then you go on Saturday or Sunday between noon and 2 to pick it up. It's right next to Giovanni's in downtown Fairborn. It's fantastic stuff. It's worth trying, especially if you look at the creations and see if there's anything that really catches your eye. There's a new one coming this week that's got peanut butter swirl. There's a banana pudding one. I know I'm buying at least 5 of them this week because there's 2 of them I want 2 of, and I'm on a diet. But anyways, so that'll last me like 2 months with 1 spoon a day. But so 571 Grill for great burgers and chicken and tacos, and it's not great on the wallet. They don't have free refills on soda, so everything is kind of a la carte when your beverages and all that. But so from a cost standpoint, Red Robin's going to be a little bit better. But if you like local, 571 is a fantastic place. They have great smoked wings. They have great pizza. And by the way, they're giving away free pizza every Friday. All you got to do is like their Facebook page. You'll see the post sometime on Friday. You like it, you share it, you leave a comment, and then you're in the mix. We actually won one a few years ago, a free pizza from them. After trying for weeks to get in, we finally won it. So they're giving away free pizza every week. Their smoked wings are awesome. Their food is awesome. It's good place, good local place. JD's ice cream for dessert, and then they'll be rolling you home, and you can sit on the couch. So
to be so full.
Exactly. That's going to do it for this week. Once again, Facebook, give us a like and a share. YouTube, subscribe and hit the bell. And all these things should be scrolling down the middle of the screen right now. And they will be actually. So and we'll see you next week. Please, questions, and any comments you want to hear about something that we're not talking about when it comes to home buying and selling and ownership. Whatever, DIY, we'll get to it. So
lay it on us, because
absolutely, we're here for you.
We'd love to open up a conversation.
Absolutely. So until next week, have a great week. Enjoy what hopefully is a great week of warm weather, and we will see you next Saturday right here at 11 a.m. on the Fletch Entertainment Network. Eric, I keep on wanting to call you Derek, and I don't know why. And we both know a Derek, so
we do. We know a Derek.
But Eric, has been fun. Have a great week, and we will talk to you next time. Okay.
Appreciate it.
All right. Take care, everybody.